Mr. Speaker, thank you. I want to thank the gentleman for yielding me time. I want to thank him for all the work that he's done as the chair of the subcommittee that is making a difference, that allows people to get access to their own version of the American dream. This is a piece of that, as the representative told you. I want to thank Representative Sewell and Representative Beatty for all their hard work. This is a bipartisan bill. This is a common sense bill. This is a jobs bill. This was a unanimous bill in the Financial Services Committee, and it passed 56-0 on March 2nd, so I'm so proud of that. The SAFE Act passed in 2008 as part of the Housing and Economic Recovery Act, and it created two different sets of requirements for qualifications on mortgage loan originators, depending on whether they worked for a state-licensed non-depository or a regulated depository. The problem with that is it kept people captive working for the same kind of company that they worked for yesterday, because if they try to change between the two, they don't have a license and they can't help people achieve their version of the American dream of owning a home. And so this will allow people to be more mobile in moving between depository and non-depository institutions. It is a jobs issue for that very reason, and it will help make sure that the workforce can go where the jobs are, and that they can help people get loans to own a home. And we all believe in home ownership, and this is a small way we can be for it today. Representative Sewell and Beatty worked very hard with me, with industry stakeholders and state regulators to get the bill that we have today that, as I said, passed unanimously out of the Financial Services Committee. H.R. 2121, as amended, would foster an efficient marketplace of competition between banks and non-banks and allow mortgage loan originators to help all Americans achieve home ownership. It provides a transitional authority if you move from a depository to non-depository or the other way around. Under the proposal, an individual who's employed by a financial institution that's been a registered loan originator under the SAFE Act for the preceding 12 months can originate loans after submitting a background check and credit information to their state regulator until the application is either approved, denied, or withdrawn, or even if it's just deemed incomplete. At that point, the transitional authority ceases. So they have to submit a full application, and then once they do that, they get a chance to continue to work under this transitional period. Again, this is a jobs issue. It will help people move between the two types of institutions that most Americans don't think about. They just want to make sure they get a mortgage, and that's what we need to make sure we facilitate here with common sense rules. Sadly, some states have had transitional license authority, but the CFPB does not allow them now to exercise that authority, and that's why this bill is necessary. And so I'm really glad that we can allow for that now to make sure that all Americans can get access to home ownership. Again, I want to thank Representative Sewell, Representative Beatty, and all the members of the House Financial Services Committee, as well as the gentleman from Missouri for his leadership, and the gentleman from Texas, the chair of the full committee, for his leadership, and the ranking member of the committee from California. This is indeed a unanimous bill. I would urge my colleagues to support it.